Hello investors, today we'll speak about 3 best dividend stocks to buy in April 2023, a good and the best dividend stocks for receiving dividend yield and of course passive income for April 2023. So let's start with the first company. It's 3M. It's a producer, manufacturing, industrial conglomerates, its sector. Its current dividend yield is about around 6%. Let's have a look on its chart. So here in my mind it was an impulse, the first wave, the second, the fourth and the fifth. Usually, by the way, the third is the largest wave in the impulse, so here it looks very orogenic. And if we look at the third wave, it here the first and the second, the third, the fourth and the fifth. So now in my mind what I think we have now we are in a correction. Most probably the wave A finished here, so A, B and C. So then I'm expecting to see a bounce in the wave B, so that's why I'm considering this stock to buy right now. Let's have a look on its fundamental parameters. So the market cap of 3M is 55 billion bucks. The valuation now, P ratio is 10. I remind you the average for S&P 500 is 15 and the PS ratio is 1.6. By the way, it's the lowest parameter for last 5 years. So the valuation is very cheap in my mind. If we look at the marginality, that net income is 17%. By the way, the marginality over last 5 years very stable. We see a slight increasement in the revenue, and of course the all last 5 years the company showed us a profit, so it's very profitable company. Of course it's a great data for dividend investors. If we look at the dividend per share, so the company continue to increase it. Also the dividend yield also is increasing. Now the last year it was 5%, now it's 6%, and the payout ratio, the amount that the company paying from its net income is 58%. So actually the company, I think here has a room even to increase its dividend payment. And let's have a look on the balance sheet. So the amount of debt is decreasing. 4 years ago it was 21 billion. The amount of debt on the balance sheet now it's only 60. Now in the area environment of increasing of elevated interest rates in the US, specifically now the Fed fund rate is 5%. So of course it's good that the company, the amount of debt is decreasing. And by the way, the free cash flow amount now is by around 4 billion bucks. So I can tell you that the company, the balance sheet and the free cash flow is showing very stable parameters. So the company 3M is the best and the first stock for today. Its performance since the beginning of the year is it's down more than 16%, but we still can receive a nice dividend payment of 6% per year. Of course, for me it's very attractive. So let's move to the next stock for today is J&J, Johnson & Johnson. So here in my mind, last years we traded in a decreasing channel. Now we traded at the lower border of this channel. And by the way, the dividend yield here is 3%, and the performance is the stock is down more than 13% since the beginning of the year. Let's have a look on the fundamental data. So the market cap is 4,000 billion bucks, dividend yield 3%, a lot of employees, more than 100,000 employees in this company currently employed, and of course the valuation. So now the P ratio 22 and the PS 4. Let me check the net income. Yeah, 4, and it's okay. for such net income. By the way, if we had a 5 6, it's also been a fair value. We have 4.2, so PS ratio, it's not expensive at all. Let's have a look on the revenue. The revenue of this company continue to grow, and the net profit margin is 19 for this sector. It's I remind you, it's healthcare's company, which engage in the R&D, manufacture and sale of product in the healthcare field, spread throughout the following segments: consumer health, pharmaceutical and medtech. So generally speaking, it's a healthcare company, very stable. And of course the dividend yield 3%. Its last 5 years is continue even to increase the dividend payments, dividend per share. And the dividend yield also, you may receive a nice dividend yield. Here is trailing 12 month 3%. I guess, I think it's now, it's generally speaking, it's okay. And the last stock for today is WBA, another healthcare company, which also operates its pharmaceutical business, drugstore chains and retail trades. Let me check. So let's have a look on its chart. Look here, in my mind it's a range. If we look the Elliott wave, the first, the second, the third, the fourth and the fifth. So I think we are finishing here the correction. By the way, we receive a very nice dividend yield. The dividend yield now is around 6%. And let's have a look on its fundamental parameters. But before, another one thing, there is the momentum indicator. Let's move to the weekly time frame. So here we see that most probably we already over sold 34 there the momentum indicator. So this is another hint, another sign that it can be a nice point to buy the stock. By the way, we can see that this level $32, it's the major support level for the last 24 years, by the way. So don't forget it. So let's have a look on the fundamentals. The market cap is $28 billion. The employees is 325 kilo in this company. The PS ratio is very cheap. Price per share is 0.21. It means that $1 of revenue of this company you can buy for 21 cents. And the revenue here is very stable, it's not decreasing. And last 3 years we see that the marginality of the company is increased. It was 1%, then 2%, and the last year it showed about 3% net income margin. And of course the gross margin profit is at the very beginning, it's not so high. That's why the EBIT margin, is net income margin, is very low. But anyway, if we'll have a look on the history, we see that the company's last 5 years continue to pay its dividends. It even increased dividend payment, dividends per share, and of course the dividend yield, it was 5%, 3%, and now it's more than 5%. Also we may see that the amount of debt for last 3 years is decreasing, now at $36 billion, and free cash flow, the amount of free cash flow and the amount of cash, also the company has $1 billion on its balance sheet of cash and cash equivalents. And of course also it can be a nice sign. Of course it's dangerous, it may be a dangerous stock because here we may see that on the quarterly data, last quarter, the company showed a loss, minus $3 billion, but But anyway, yeah, we see it here. Anyway, I believe in this company. So I very hope it was an exception for WBA the last quarter, and of course I hope that I will receive this 6% of dividend yield uh, towards the next years. So generally speaking, it was my three stocks for April 2023: WBA, J&J, and 3M. If you like this video, if you like dividend stocks, if you're interested in the stock market analysis, fundamental analysis, technical analysis, so of course press the like button. Don't forget to subscribe to my channel, and see you on the next time.